The housing market collapse is being exacerbated by the sharp increase in interest rates, which is feeding concerns that a recession may be on the horizon following the sharp decline in homebuilder stocks last week and weaker than anticipated demand for mortgages in May. Millions of people are currently in arrears on their rent, and a wave of evictions has started. What's good, you guys? This is Market Thrive, and today we're going to talk about the dire state of America's housing crisis and what to expect down the road. Before we start the video, I would just like you to do me a favor by just hitting that subscribe button and the bell notification down below to keep you updated on this channel. So without further ado, let's hop into it. The cost of a home has reached its highest point ever, and prospective purchasers must contend with skyrocketing mortgage rates, rising treasury yields, and growing borrowing costs. However, since January, around 19 million potential purchasers have been priced out of the market as American consumers struggle with rising food, gas, and energy prices. An investigation of Fannie Mae by Black Knight found that the housing bubble has begun to deflate considerably more quickly than anticipated as a result of data and declining demand. Redfin, a real estate brokerage company, really cut 8% of its staff as a result of that. The company has hired far too many real estate brokers over the previous 3 years, Redfin CEO Glenn Kelman said in an interview last week as demand began to slow down. Quote, "I feel this deep responsibility for the fact that we had too many people coming into this home buying season. We have been hiring at a berserk rate in 2020 and 2021. Just to keep pace with the housing market, and then everything went soft very quickly and found ourselves idle in many departments, so we're at the right size now," end quote, Kelman said. Additionally, housing starts in May decreased by 14.4%, and it doesn't appear likely that demand will increase to the level it was a year ago given that mortgage rates are currently hovering around 6%. Kelman points out that homes that would regularly receive a few dozen offers last year are no longer receiving even one, as prices become too exorbitant for many Americans. When you move from 20 offers on one house to 5 offers and 1 offer, there is a significant difference. It suggests that some properties aren't receiving any offers at all. In the last 2 years, the median home price has increased by 44% and surpassed the $400,000 threshold. The executive claims that in May, home prices rose for the 124th consecutive month. When rising mortgage rates are taken into account, the executive claims that the median pay for a median home has climbed by an astonishing 50%. That is the result of rising property prices and interest rates, both of which are at all-time highs. Rents are also increasing rapidly, which is hurting financially savvy renters and driving down total home affordability at its fastest rate ever. Brandon Schneiders, a 40-year-old single father who resided in Port Orange for 20 years, claimed in an interview with NPR that he was forced to move this year after learning that his landlord intended to sell the home he was residing in. When Schneiders began searching for other rental properties, he experienced a second rude awakening. Quote, "I found the house that I was living in posted for rent for $2,000 and I was paying $1,400, end quote, he recalled. As he was running out of options, Schneiders bid on a rental priced at $1,750 and was told he had a deal. However, the next day, the agent informed him that someone else had just made a $200 higher offer. The figure reached a record high of 97.6% in the first 3 months of 2022, when the rental market normally demands residential occupancy. As fewer people can afford to own a home, there is an increasing need for rental properties. Rents have gone up more than 30% in Austin, Seattle, and Cincinnati. The average monthly asking rent in Los Angeles is $3,400. Landlords who know well that their tenants will be forced to move as a result of these rent increases are effectively evicting their tenants, allowing them to rent the newly unoccupied units to new tenants at substantially higher prices. It goes without saying that the sharp increases in house costs are putting a strain on millions of Americans who are already feeling the effects of inflation and rising consumer goods prices. Naturally, costs have been passed on to customers even as some of the biggest companies in the world are making record profits. More than 8 million Americans are behind on their rent payments and at risk of being evicted within the next few months, according to a recent Bloomberg study. So those who can still find methods to pay for the roof over their heads are among the privileged. The remaining piece of legislation serving as a safety net to keep people off the streets, eviction moratoria, will expire in August 2021. 8.4 million Americans, or nearly 15% of all renters who are behind on their payments, fear eviction in the absence of a federal eviction moratorium. A household survey by the Census Bureau was conducted between June 1 and June 13 and included the latest data. According to Bloomberg, the study revealed that 3.5 million households were just somewhat likely to vacate their houses, apartments, or rented spaces in the next 2 months due to an eviction. The majority of these people are from the working class and are located in major metropolises like New York and Atlanta, where the cost of living has skyrocketed and includes things like housing, food, and fuel. 6.7 million families reported an average monthly rent rise of $250 over the previous year. Although the rise doesn't seem like much, keep in mind that many of these people are suffering from the worst inflation in 40 years. As incomes have not kept up with soaring consumer prices, their credit cards are maxed up and their savings are gone. According to the most recent data, there is currently a tidal wave of evictions. Eviction filings have already reached pre-pandemic levels, according to research from Princeton University's Eviction Lab, growing by 80% in March and by a further 47% in May. As more would-be home buyers are priced out of the market, mortgage applications for home purchasers decreased by 21% last month. Mark Zandi, the chief economist at Moody's Analytics, has issued a warning that a coast-to-coast price meltdown in the U.S. home market is imminent. According to Zandi, his company anticipates a sharp decline in property prices in the most intensely competitive and overpriced markets. Solomon Partners senior real estate advisor Larry Bowe informs you that a home market crash is coming and has already begun. Some motels emphasized your average home buyer cannot afford to pay the same amount as they could, so prices need to adjust, end quote. According to a recent review of the major regional housing markets in the country by CoreLogic, out of the 392 areas it covers, at least 45 had a greater than 50% likelihood of experiencing a decrease in local home values over the following year. That represents an increase of 73% from the previous month, when only 26 markets fit that description. As mortgage rates have risen steadily over the past few months and consumer confidence has been shaken by high inflation and recessionary fears, the likelihood of a price decrease has increased. Selma Hepp, CoreLogic's deputy chief economist, said that the number of markets with a greater than 50% chance of a price decrease has nearly doubled. For years, housing affordability has been declining, and things are only getting worse. At this point, an increasing number of Americans do not think that it is a good time to buy a property. In May, the number of survey respondents who believe it is a good time to buy decreased to 17%, while the percentage who believe it is a bad time to buy increased to 79%, according to Fannie Mae's Home Purchase Attitude Index. Overvaluation and speculation are two essential components needed to keep a property bubble growing. However, income growth cannot always outpace housing price rise. The 2021 housing boom appears to have come full circle, culminating in a historic explosion this year. Given that a smaller proportion of Americans can afford to buy a home in this atmosphere, and sellers have already started to lower property prices, the housing market in the United States is going to experience a lot more instability. What we've already witnessed is only a foreshadowing of the impending catastrophic decline. The property market crash of 2022 has just begun. So what do you think about this? Feel free to jot down your thoughts in the comments section below. If you enjoyed today's video, please leave a like. And if you want to stay updated on our posts, hit that subscribe button as well. Once again, this is Market Thrive signing off.